Investing offers each and every one of us the opportunity to participate in the ownership of the great global businesses of the world, in turn improving our lives and those of our families. But it's not plain sailing, and with it comes some very real emotional challenges. If we look at a single day in the world's biggest stock market, there's almost a flip of a coin chance as to whether you'll be better off or worse off at the end of that day. But if we stretch that investment time frame to just 1 year, we then have a 77% probability that we'll have been better off. And if we go further to a decade, we've now got a 90% probability that you would have been in a positive return. These are the numbers that matter, and it's difficult when markets take a downturn sharply, but this is where our focus must remain. For those of us accumulating wealth and still building our investments, temporary market decline should be welcomed with open arms. Think of it as a 20% discount on the basket of companies that you're buying. By definition, a bear market is simply that, a 20% decline in the price of the index from where it was previously. Bear markets don't come around as often as bull markets. Typically, on average, we'll see a bear market every 5 to 6 years, but their timing is completely unpredictable. So, when these do occur, make sure you take full advantage of the decline in prices and lean into this. As long as the world progresses as it has over time, all declines are temporary, and in the long term, you'll see the benefit of the investments. For those near to or already reliant upon their investments to provide them with an income, market declines hit home much harder. You're now possibly having to sell some of your investment at a loss. But this is where financial planning really comes into its own. A financial planner can help you establish your investment comfort zone so that you craft a plan that you can stick to over time when things get difficult. With the advanced cash flow planning tools we have on hand, we can stress test your plan to ensure that we can model different market scenarios and work out the probability of success for your plan. This ultimately helps everything stay on track and gives you greater peace of mind. The other element, of course, is our behaviour, and a great planner will be on hand to provide support and reassurance when it's most needed. Market downturns are a feature of the system, not a bug. The natural volatility that comes with investing has to be accepted. This is the way in which we achieve the long-term positive returns. Many of us will have heard the very valid but somewhat cliched adage of time in the markets, not timing the markets. But when it's your money invested, when the sums start to become bigger and the daily movements creep into bigger numbers, investing during a downturn presents a very real emotional challenge. So everything comes back to your own story. Why did you invest? What was the original goal or purpose for that? An investment portfolio without a plan is like a rudderless ship, destined to be shipwrecked at some point. So if you want to get your own financial plan in place and navigate the next market downturn with the professionals, contact active, chartered financial planners.